We've gone on live on YouTube, I guess.
Yep.
Okay. Prashant sir, if you can maximize your screen.
Yeah. Does it show? Does it show?
Yep. Sir, since people are still coming in, I think we should wait another 5 minutes before we begin.
Yeah, sure.
Thanks. Hi, Siddhant, welcome.
Hi, Vijay, Mr. Vijay. Looking forward to this session. So I think got great speakers today. So
Yeah,
very keen to.
yeah, we've got the lineup done. Waiting for Rakesh to come in.
Yeah, I think we're waiting for Rakesh to join. Uh,
Good evening, Harshal. Good to see you.
yeah, well, let's start, please.
All right. A very good evening to you all. On behalf of Ajmera Law Group, I extend a very warm welcome to all the speakers and attendees for the launch of the new venture, Ajmera Capital, today. Before I start the introductions, I just request everybody other than the speakers, if you can keep your mics muted and videos off so that we don't have bandwidth issues. My name is Vijay Kumar and I'm the CEO of the Ajmera Law Group. I will be taking your questions at the end of the presentations for the concerned speakers. And we have also created a WhatsApp group. If you are interested to join this group, please go to the chat box and leave your request there. This group is created to provide you updates on global investment advisory services. Ajmera Law Group started its service journey as a boutique law firm in 1993, specializing in cross-border personal law and global investment practices. The founder of the law firm, Advocate Prashant Ajmera, had a vision to establish a global investment advisory practice way back in 1998 when he conducted the very first seminar on outbound investment to USA and Canada in Mumbai, India. The event was very well covered by Times of India. In 1998, Advocate Ajmera was 10 years ahead of his time on outbound remittances from India, which were not permitted at the time. The Indian government introduced the liberalized remittance scheme in 2008, popularly now known as LRS, and in 2015, when the limit of the outbound remittance was increased to 250,000 US dollars. Mr. Ajmera found the perfect opportunity to fulfill his long cherished dream of establishing an outbound investment advisory practice. Over the years, Ajmera Law Group has established professional associations with more than 30 law firms and related professionals around the globe. To share his knowledge and experience, Mr. Ajmera has also authored two books, Millionaires on the Move and How to Plan for Your Child's Foreign Education in 2020, Myth versus Reality. Both these ebooks are available for download at www.ajmeralaw.com/ebook. Now, having given you all a brief introduction about Ajmera Law Group, let me come to the reason why we are here. Ajmera Capital is a pioneering venture of Ajmera Law Group, offering outbound investment information, advisory, and referral services through this portal to HNIs, SMEs, and startups in India. This portal brings together several asset classes such as global financial markets, global real estate, second passport, global enterprise, startup, all under one domain. The portal will also provide information regarding global investments by means of articles, blogs, newsletters, webinars, workshops, masterclasses, and formal training and certifications. Today's program, we are featuring six speakers. And without much further ado, now I request Advocate Ajmera, the founder and chairman, to present his opening remarks, and then we will start with the speakers. The mic is all yours, Ajmera sir. Please take over from here.
Thank you, Vijay. Thank you very much for the introduction. And first of all, let me welcome all the speakers. Thank you very much for joining us. Today's launch of this Ajmera Capital virtual portal virtually. And the initiative which we have taken, which Vijay has mentioned. Also, I welcome all the attendees who has taken their valuable time out and joining us for this portal. So I'm not going to do a formal presentation, but want to give you a perspective that why there was a need for such kind of a portal in India. Because as the Vijay mentioned that in 2007 and 8, we saw for the first time in India, let me just do the recording of this. We saw the first time in India, basically outbound investment regulations coming from government of India for an Indian companies if they want to make investment outside India. At the same time, we saw also the liberalized remittance scheme for an Indian citizen or an individual to make an investment outside India. So if you look at the companies last about 6 years of data, the Indian companies who has made an investment outside of in India, you can see in 2014-15, it was about a $7 billion, 10, 15, 16, 13, 12. That kind of an investment is being made, actual investment is being made by Indian companies, multinationals out of India. And to serve them, we always find big banks, financial institutes, law firms, chartered accountants, and related professionals to advise and assist them if you wish to make investment outside India. So that area or that sector is very well served. Then we look at the second sector of the individual Indian citizens who are making an investment or remittance out of India. You can see from 2006-7 onwards when this scheme was first started, It started with barely $17 billion to right now we are reaching almost at $19 billion. But if we look at this data very closely, you can see that most of the money, or almost $10 billion, are being remitted by the Indian citizens for the children's study, close relatives, and a gift. That means the living expenses for the children's, those who are studying abroad. We also spend, Indian citizens are spending almost $7 billion in traveling. So we know that the foreign travels in the recent 10 to 12 years has increased. But if we look at the investment outside, which is in the red I have highlighted, it's a very small amount. Compared to the $19 billion, only we see a probably 1 billion and a plus investment outside India. So when I saw this data, it was kind of a bothering for us that if 19 billion is going out of India, why there is an investment of only $1 billion and not otherwise. And looking at that one, we realized that based on this data, what we have it, that there is a substantial change in the lifestyles of the Indian people or Indian citizens, that obviously this data shows us that they are doing an international travels, holidays, children's educations, second home, wedding destinations. So they are spending money abroad. But what was happening was that they are Indian citizens are earning in India and spending it abroad. And why this one was happening was we realized it that there was a lack of knowledge. There was a lack of knowledge, which brings the lack of trust in India. And you know that in India, the business is done more by a trust and a personal reference than anything else. So when I started talking to big banks, and when we wanted to do our first LRS transaction for one of our clients for $500,000 for an EB5 visa, I had to go to almost 5 to 6 or 7 different banks to particularly find out that if they can do an LRS transaction for them, because they didn't even how to do a transaction as a bank. I spoke to a number of colleagues and big law firms, and there was also a lack of knowledge when it comes to the individual person making an investment outside India. Similarly, chartered accountant, financial professionals, and investors, they were all having a lack of knowledge when it comes to the making an investment outside India for an individual citizens, that what would be the process involved, what would be the tax compliance requirement in India, what would be the tax requirements or my probable tax in the other country if I'm making it in England or in USA. So it was becoming a kind of a very unknown area for the professionals and for the investors. And that's at the same time, even though we are a small boutique law firms, we are receiving since last 2 years, 3 years, a continuously request from the foreign companies and government agencies and organizations who are interested in entering into an Indian market and attracting the Indian HNIs and ultra HNIs. But somehow the things were not happening. And that's the point in time we thought that we need to do 2 things. We have 2 problems, and then that's why we need 2 solutions. One is an Indian portal that brings together all the foreign investment opportunities in different asset class under the one domain. And the second one is what we are going to do on 30th of January on 2021 is a non-profit associations or a forum to share the global investment advisory knowledge in India. I think if we bring these things together, 2 different aspects of it, we will have a whole new world in India for the global investment advisory. Because, with due respect to everybody who is here, we are as an Indian financial market, Indian global market, outbound investment, we are running a little bit behind in time. And we have to catch up. We have to go to the speed of the world market. Then the only way it can be done is by bringing the knowledge of the product knowledge and the procedural knowledge or the professional knowledge to the Indian professionals, Indian financial industries, Indian real estate industries, lawyers, chartered accountants, and everybody and anybody. And that's the main reason we thought that we should have this two problems, and we should have two solutions. So on Ajmera Capital portal, what would you find? Obviously, you will find a global stock markets and related product. Three of our associates, and they are also the partner with us in our association, which I just mentioned, forum for the overseas investment awareness is here. There's going to be an information about the global real estate, that if you want to make an investment, about the second passport or residency and citizenship by investment, and the global enterprise or a startup. That means if you are interested in making an investment into a business, how it would work. Our tagline, foreign investment zaruri hai, for the benefit of the other speakers who do not understand the Hindi language. Our tagline of Ajmera Capital is foreign investment is necessary. And there are a number of reasons are given, but I think we have agreed on two main aspects of this. Why the foreign investment is necessary for an Indian investors or Indian citizen is because of the currency exchange rate. We have seen the currency exchange in 2008, it was around 50 rupees. Now it is 75, 76 rupees. So there is a big difference is there. So in order to avoid the currency risk, we should have that one. Number one. And the number two is, if we look at the global Dolex 30 index of India, that means the top 30 company of India, if you take, and if you look at their returns in terms of the American dollars, the return is almost zero or negligible. That means, yes, in rupees term, we might be making a very good return here in India. But on a time-to-time basis, if we continue to convert that one into a foreign currency, particularly to the US dollar, our investment in India is not making us a reach by world standard. And these are the two main reasons we believe that we should have the foreign investment outside India, and every citizen who is exposed to globally should make an investment outside India. So today's we have 5 speakers. Sitashwa Srivastava, he's the founder and CEO of the Stockhill USA. Himanshu Gupta, founder of the Crystal AI from Singapore. Rakesh Rachwani is a founder and Guranti UAE. Grant Hicks, he's a practice management expert from Canada. And we are honored to have Robert Barnes, the CEOs of the Turquoise London Stock Exchange Group, UK. So I will not take much of the time, and I'll ask Mr. Vijay to make introductions of the Sitashwa, and then he will make a presentations about his platform for making an investment into United States stock market and how seamlessly he has developed this platform. So Vijay, it's over to you. Thank you.
Thank you very much, Chairman sir. Indeed, a great opening of the sessions by letting us know why global investment has become so necessary. Our speaker for the day, first speaker is Mr. Sitashwa Srivastava. He's the founder and CEO of Stockhill, as Prashant Saab just said. He's also in charge of the investor relations, global expansion, strategic communications at Stockhill. Today, he's going to be speaking to us on investing in the US stock markets. Prior to Stockholm, Sitashwa co-founded Jade Magnet, which is Asia's first B2B crowdfunding platform focused on technology services. Over 3,500 companies use Jade Magnet, including many consumer brands, technology companies, thousands of SMEs and startups. With operations and presence in India, the US, Qatar, Singapore, Jade Market won awards at Global Technology Summit California and TI Global, and was also recognized as a NASSCOM Emerging 50 company. As a matter of pride, Jade Market is a subject of a Harvard case study as well. Sitashwa has a background in crowdsourcing platforms, fintech, business consulting, consumer marketing, and after starting his career building clearing platform technology for 14 large UK-based companies at Pirot Systems, Sitashwa went on to work with Cognizant in the areas of consulting, technology-oriented marketing for large consumer brands in India, US, Southeast Asia. Over to you, Sitash. The floor is all yours. You have 10 minutes to make your presentation. Thank you.
Thank you so much, Vijay sir. Thanks a lot for inviting me. Great to be here. Thanks everyone for joining in. Mr. Ajmera, glad to be a part of Ajmera Capital, and privileged to be a part of this particular discussion today. Thanks for providing me with the opportunity of talking more about Stockle and telling everyone what we are trying to do here. I have a bit of a deck that I will share just to sort of have some context for everyone who's here. But before I get into the deck, I'll just spend maybe 30 seconds on what led to Stockle. I and my co-founder Vinay, we started Stockle as a platform actually for US-based retail investors investing in US markets back in 2015-16. We were our first product was like a poor man's Bloomberg terminal, a personalized investing experience for the retail investors, where we tried to create intelligence and research, automated research facilities, which otherwise would not be available to retail investors in general. But over a period of time, and especially around 2018-19 timeframe, we started getting a lot of people in India and particularly and Asia in general asking us about using our platform to invest in the US markets, and then subsequently invest elsewhere as well, perhaps, but overseas in general. And as we ignored the opportunity, to be very honest. Initially, we felt, hey, how big of a market can this be? And as a startup, you can only do one thing right at a time. But the demand just sort of kept going up, and it reached a crescendo around, I think, mid of 2019. And at that time, we figured that the Indian market was also going through its own downs and ups as it happens. Whereas the US market was obviously has been doing very well. The other thing that we realized was that retail investors or retail individuals, like Mr. Ajmera pointed out, were sending more and more money overseas for the purpose of expenses. $4.9 billion being spent by Indians on fees just last year is a lot of money, and it could be much better planned and saved and invested in advance. Why save in rupees and spend in dollars when, like Mr. Ajmera said, the dollar used to be around 48, 49 rupees a few years back, and now it's above 75 on most days. It's just inefficient. And we figured that, that if these are the volumes we are talking about, 18, 19 billion dollars, potentially, this will go up to 30, 35 billion dollars in the next 3 or 4 years. It sort of at that scale, it just makes sense to be able to invest internationally, to not constrain oneself by keeping all the money local. That is one thing. The other thing we realized was that why should there be a geographical limit on money? There are great companies like Western Union of the past and TransferWise and a few other companies which are solving the problem of transferring money overseas seamlessly and easily, affordably, cheaply, etc. as well. But nobody has still addressed very early days of a few companies trying to address the problem of investing money in a manner that geography is taken out of consideration. Why should all my money be local when all my expenses are not local anymore? And that thought process ultimately led to Stockle. To sort of dive into, and I know I have only 10 minutes, I've probably used up like 3 of them. Dive into what we're doing. It's a global investing platform for retail investors, individuals who want to invest as low as the equivalent of $100 or $50 even, are using Stockle today to move money overseas and invest money in things they like, appreciate, and want to be a part of. I'll spend a couple of minutes on why invest in US markets. Some of this has become obvious over the last 4 or 5 months, I would say, especially with the demand just increasing manyfold. But just to address, one critical thing that I think is important for everyone who's investing is the fact that diversification is very, very essential to any portfolio. It's a no-brainer in today's time frame. And local, people spend a lot of time and effort diversifying their monies locally, investing some in mutual funds, some in equities, single stocks, putting some money in, fixed income products, but that's still very local. If all your money remains in a single currency, you are not politically diversified. You are not, getting away from the risk that a single currency exposure brings. In that context, if you look at the US, the India-US market correlation is very low. Fortunately, I mean, it's just 0.36. So these are not, highly correlated markets, which means that it's not always that if the US market doesn't do well, the Indian will also not do well. So if there is less of correlation, in my opinion, it sort of leads to a kind of complementarity. If you are invested in both places and they're not correlated with each other, it's just great for diversification. Of course, it's a much broader, deeper market as well compared to the Indian market. Dow Jones is almost 8x the size of Sensex, in terms of just market caps. And unlike India, there is access available to many unique opportunities through the US markets all over the world, be it investing in Japanese companies or European companies or Chinese companies, or be it investing in areas which are unavailable in India. For the most part, for example, if you're looking at technology as a sector to invest in, US is obviously very tech heavy these days, especially in the last few months, I would say, from a market cap perspective. India is very, very low on technology. There is hardly any technology product company which one finds in India. Similarly, if one wants to invest in artificial intelligence, some of the themes that are going to take the world forward, perhaps, none of those companies are listed in India. Data, analytics, some cutting edge work on healthcare and pharma, energy, a lot of these things are just not available to the Indian investor unless the Indian investor is ready to diversify out of the Indian market. Other than that, of course, it's a mature and well-governed market. It's a less risky market. This a lot of people don't actually appreciate. That the Indian markets actually trade at higher PE multiples, and at the same time they give lower dividend yields. So just if we just compare data, it's a lower volatility market, which at the end of the day is actually yielding slightly higher returns in terms of a stable income, if one has to look at it that way as well. Insurance is available, which is something which is absent in India for the most part. I think a lot of people get a little bit concerned about why should I mean, if I'm investing overseas, then how protected is my money? What happens if this company disappears, etc., right? So in this case, platforms are stable, and there is $500,000 worth of insurance available overall. So that's again something which is very interesting, which is not there locally. A bit about the Stockle platform, and it's the stuff that we have done. It's a growing platform. Just in 2020, we've processed over 1,500 crores in worth of transactions. Every month we are processing nearly 250 crore rupees worth of transactions. Translates to about $200 million worth of transactions just this year overall. We are doing almost $40 to $50 million worth of transactions every month on the Stockle platform. Thousands of investors are getting added every month to the Stockle platform as well. So it's a platform that has sort of stood the test of time in that sense. It has gone through, survived a period of high volatility in the US markets as well. The last 4-5 months have been uncharacteristically volatile, I would say, from a US perspective. What with the oil crisis in April, and then the times in various stock splits of popular stocks like Apple and Tesla a couple of months ago, and then of course the US elections earlier this month. And then, just to sort of touch upon a couple of other aspects of the platform, people can invest in stocks and ETFs. We're also adding mutual funds to the platform. There is a global portfolio marketplace, which is available as well. So there are expert-built portfolios built by some great companies, wealth managers, portfolio managers, and analysts, which we are making available to the Stockle audiences. So if you are investing through the Ajmera Capital platform, you will have access to some great productized advice, I would say, with very low minimum amounts, etc. So one can even invest like $1,000 in like 25 stocks, and that portfolio will be maintained by a great portfolio manager, an expert portfolio manager, somebody who's a company or an individual who's renowned in the space, whose research has been proven, that has stood the test of time, etc. The third product that we are coming up with over a period of, I think, the next couple of months is a cash management product. This specifically addresses the requirement of those people who send money overseas for the purpose of just expenses today. We're telling them, look, start saving overseas, start saving in dollars, if you may, and save up over a period of time and use. Let's say if you have an expense coming up 5 years down the line, then you should be able to, create like a piggy bank, for the lack of a better description. Keep putting some money in it and utilize that whenever you want to. That's again a facility which is not available to most Indian citizens or Indian residents, especially unless they're investing like $500,000 or anything less than that, more than that. Some of the things that we have seen on the Stockle platform, people use ETFs for diversification. That's like very popular. This is, of course, other than the hobbyist investors who are buying Tesla every day. A lot of people are trading in popular companies on a daily basis. But commodity ETFs, regional diversification through ETFs, of course, thematic diversification as well, or thematic opportunities being accessed through ETFs in energy, nuclear energy specifically, or artificial intelligence, healthcare, etc. is extremely popular among Indian investors. These are just some of the names of companies which are creating portfolios on the Stockle platform. Global X, for example, is a firm owned by Mirae Asset Management. They manage about $16 billion worth of ETF investments in the US. They've made portfolios which we call stacks on the Stockle platform. There are a few more which are coming up as well. So it's a platform which will make it very easy for people to sort of invest. And talking of easy, the process is very digital. It's 100% online. In fact, over the next month or so, I think we'll be able to bring it down to almost the way it is done for a US citizen. 10-15 minutes for a brokerage account, and next day just remit money and you're done. Start investing. We're working with 10 large Indian banks to provide remittance, logistics, etc. as well. We're obviously, we have multiple US brokerage and clearing services partners on the back end of our platform to take care of custody and clearing services. The entire process, like I explained, is online. It takes barely 10 minutes of human effort from an investor perspective to do this. And you're pretty much, online and ready to invest in a couple of days. Mr. Ajmera mentioned this in his, when he was talking as well. India-US logistics legalities is an important part to address. Our platform tries to address this as well for the sake of the investors who use this platform. So the liberalized remittance scheme of the RBI, the paperwork that's required to be done, all of that is digitized between us and the banks, which are our partners in India. That's all I had for now. Yeah, thank you so much.
We'll do the questions at the end when we are finished with everybody. So Vijay, if we want to go with the next speaker, that's Himanshu Gupta, please.
Yeah.
Thank you, Siddharth. Thank you for your time.
Thank you.
Really nice presentation.
Thank you, Siddharth, for the insight that you shared with us on Stockle, and I'm sure it was useful for all the attendees here. We do have a couple of questions which we'll shoot to you at the end of all the presentations.
Most welcome. Thank you.
The second speaker that we have today is Himanshu Gupta. Himanshu is the founding member, Global Chief Operating Officer and India Business Head at Crystal AI. He's sharing with us his Gyan on global portfolio management. He holds a Bachelor of Commerce degree from Pune University and a Master's degree in International Business. He has over 18 years of experience in the financial industry, services across business development, business controls, regulatory matters with HDFC Bank, India, Standard Chartered Bank, UAE, and JP Morgan, Singapore. During the summer of 2018, he relocated to Pune, India, from Singapore to be with his aging parents. And since then, he has been focusing on taking Crystal AI from a fintech startup from Singapore to a global digital-first investment platform. Over to you, Himanshu, and you have the floor now for yourself. Thank you.
Thank you, Vijay, for that introduction. At the outset, heartiest congratulations to Prashant Bhai on the launch of Ajmera Capital. Very excited to be part of this journey with you, and certainly wish you all the best. And thank you again for allowing us to use this platform to talk a little bit about what we do at Crystal.ai. I'm going to take just share my screen for a brief presentation to just give a sense of what Crystal.ai is. I will refrain from further highlighting or reinforcing some of the very important points that Mr. Ajmera made, and then Satash also reinforced with respect to the need for creating global assets, not only from a market return perspective, but also from a very simple asset liability mismatch. We've seen, of course, rupee depreciating at a fairly stable trend of close to 5%, over the last so many years. And I think those facts are not lost on anyone. Now, Crystal.ai, basically what we started back in 2016, right? As a young fintech company based out of Singapore, we got our advisory fund management license, and that's essentially what we are. We are an advisory and fund management company. And in this short period of 4 years, where the last 3 we've spent in actually managing client money, and the first year or so was more spending time developing our technology, developing our platform. We today have close to 25,000 users benefiting from our advisory solutions, a little over $175 million of assets under management, and with over 40 partners within India and the Middle East to bring this offering to their clients, and also from a product perspective. When we decided to sort of address the problem of global investing, we obviously saw that there is a significant gap in not only the retail offering, but also the mass affluent offering, which private banks are not able to fulfill. And we actually set out to try and address that problem of bringing access to products in a sensible, transparent, cost-efficient manner to the more discerning investor. And bearing in mind that the industry at large, not necessarily only in India, is perceived to be fraught with a lot of product push, and independent advice is certainly something that clients look forward to and appreciate a lot. So we actually decided to take that one step ahead and use technology and develop our own advisory algorithms. And I'll speak about that briefly in a moment. But today we are a 70-member strong team across primarily 3 locations, bringing together 120 years more of experience across various aspects of international financial markets, right? And bearing in mind the legalities or the regulatory framework, which is very important, that Satash also touched upon. Today, we already have advisory and fund management licenses granted by the MAS in Singapore, by the SFC Hong Kong, and also by the SEBI in India for advisory and broking. Now, our entire sort of focus or journey is designed to be digital in nature, right from the onboarding of clients, no matter which part of the world they are in, the funding journey, and then obviously enabling the platform and enabling investors and their advisors to access product which is not only limited to stocks, ETFs, or the basic mutual funds, but there are a lot of other exciting opportunities out there in terms of potentially startups and pre-IPO investments. And as an Indian investor, we see some of these things. We probably know people who are working with these startups and always wondering how do we actually get a piece of that action, right? But most importantly, what we have managed to successfully do and scale up is apply a very sensible approach to advisory, or what we believe is a sensible approach, right? Standing on the basic tenets of first asset allocation, and then within those asset classes, coming up with recommended strategies. Because while there is a speculator, I think, in all of us, in all investors, in the long run for wealth creation, wealth preservation, a sensible, stable approach is what probably works the best, right? Uh, all are so while we are a fund management company ourselves as a platform, there are certainly strategies or solutions or that we manage ourselves, right, using the standard or best in class risk management tools, but we've also brought onto the platform a lot of the third party managed funds, which adds a different flavor. So we're not shy of saying that, we don't have all the answers, but certainly we want to make this a platform whereby investors, the more discerning investors who are looking to park a decent amount of money and build their portfolios, have access to the most suitable and best in class investing opportunities. Uh, Now, it's very important over here that while outside of India, yes, this is largely a DIY platform. Global investing, we understand, forms a part of the Indian portfolio. And this entire offering is effectively in India designed to be offered via partners such as Ajmera Capital. And tools necessary to assist the partners, even from a account management perspective or an advisory perspective, is what we have created, right? Which kind of gives a god's eye view of what clients are doing, including running advisory algos to have more sensible conversations with the client, maybe. Uh, right? Uh, Again, taking a leaf out of Satash's point. Now, while we've built a lot of technology ourselves, it's extremely important when we start thinking of global investing that the ecosystem is quite different from the stakeholders and the way things happen in India when we're doing using a brokerage or buying mutual funds domestically, right? So while we've created the entire interface layer ourselves, the underlying fulfillment from a market access and custody perspective is obviously being done using best-in-class service providers like interactive brokers like Saxo, who in turn are using institutions like HSBC and Citigroup to custodize client assets. So it's extremely important, uh, not only for investors, but for everyone to understand that here safety of assets is prime, right? So just because it's easy to access, easy to get advice, and actually easy to invest money as well, safety of assets is certainly not compromised, right? The next important layer is obviously advisory, which we've developed ourselves. So in addition to having the asset allocation approach and within that specific investment approaches, we do have strategies, like I mentioned, from third-party fund managers. Each one of them goes through a very stringent sort of curation philosophy that we have. The Crystal Investment Committee vets all these, to ensure that we don't have anything particularly tricky on the platform, right? And as a platform, the next portion is obviously the breadth of and depth of product or instruments or solutions that are available, right from the basic stocks, ETF, REITs, expanding into bonds, be it sovereign bonds or even corporate bonds, and similar to stacks that Stash mentioned, thematic baskets, which allow investors to pick out either various themes or geographies depending on what they're doing. It could be interest in Vietnam, it could be specific interest in the Chinese sovereign bond market, or even in some cases digital currencies, right? The next interesting piece, of course, for the investor is hedge funds and venture capital funds. Now, typically, these have been accessible through private banks, of course, but in significantly higher ticket sizes, $250,000, maybe $500,000, or even higher, depending on the fund. Today, we can proudly say that these strategies are now accessible to investors for ticket sizes for as low as $25 or even $50,000. Just a case in point, a lot of us would be familiar with the KKR4 fund that has been making waves in India with their investments in the Reliance Geo platform and the retail platform. Now, KKR typically would not take any money less than $10 million. Through the Crystal platform, we've made it available to investors for as little as a $25,000 or $50,000 ticket size. Right? Structured solutions, of course, in terms of more tactical in nature, are accessible via the platform as well, curated in terms of the underlyings. And we were the first ones to be able to offer something like this in the space of debt income. Typically, ELNs or FCNs have always used equity underlines or equity index underlines, but nobody was able to had yet launched anything sensible in the space of fixed income, and we were able to do that, taking advantage of the US Fed's sort of focus into some of the debt ETFs and the debt market broadly in the US. Last but not the least is, of course, the startup and the pre-IPO stock, right? This again, which had been largely accessible to a limited few, is now available quite easily, right? And I think similar to observations that any other players who are wanting to bring international investing to investors, either directly or through partners, the onboarding process has been simplified to the extent possible by a lot of GovTech link ups and making the whole process easier. Right, so we today can sort of turn an onboarding around in 24 hours or less, ready with an investment account, just waiting for the client then to remit funds and begin the investment journey, right, with algo outputs being ready in a minute or so. I'm not going to spend time on this, but the effort here again has been to try and digitize the LRS process as much as possible. And I think that's a common problem anyone who's facilitating international investing faces today, right? And we have made a little bit of progress on that. Of course, there is dependency on the domestic 82 banks to make this process happen. But happy to say they are seeing the value in being able to work with us, and I'm sure even with Stockal, right, to make this process a lot more efficient for their clients. Just going to spend a couple of minutes on the algorithm, right, on our advisory approach over here, because I think this is very important. While it is relatively possible for a lot of people to access product, right, the advice in terms of quality and nature is what a key differentiating factor is in our view. And our algorithm has essentially been designed to take that into account and is basis an optimization model. So of course, investors do get risk profile, products are risk profiled, and the algorithm uses various inputs like market data, backward looking, forward looking, curates it with product risk, investor risk, and then actually in a matter of a couple of minutes, proposes a complete portfolio for the intended investment amount, right? And the best part over here is because it does not take any fee, etc. It is into account. It's entirely unbiased, right? And we feel that that's potentially something that end investors do appreciate and do value. And of course, for the private wealth individual, the advisory is bionic in nature, and hence, takes human interface. Just conscious of time, so I'm going to rush through a little bit and just sort of end through, I mentioned that in India specifically, we are wanting to enable partners with this journey. So, white label solutions to the extent are there to make their lives easier and effectively turn a regular relationship manager into a superhuman advisor, similar to Iron Man, if you may. And it's not only the platform that comes through. We are conscious of the basic need for building comfort, not only with clients but also with advisors when it comes to global investing. And that, of course, comes in the form of a good amount of product or solution collaterals, regular updates on markets, either through videos, webinars, or even through newsletters, and appropriate sort of education or appreciation of markets and the vagaries of markets, of course, is key over here. And that's certainly an area where we put in significant amount of effort. This is just a quick snapshot of our team. Ashish and Vineet are our founders. Ashish is the CEO based out of Singapore. Vineet is our CTO based out of Bangalore. Of course, we've had great investor support in the form of IDG and a very well-established team in terms of our investment committee and business heads as well. Right. I will stop at this moment and happy to take questions from Vijay sir later. So thank you again, Prashant Bhai, for allowing us this time.
Thank you, Himanshu. It was a very nice presentation. Vijay Bhai, next speaker is Rakesh Bhai.
Yeah. So thank you, Himanshu, for sharing about Crystal with us. We are reserving your questions that have come to us, and we will give it to you at the end. Welcome, Grant Hicks. The third speaker that we have for the day is Mr. Rakesh Rachwani, and he's going to be sharing with us on how and why on global SIP investments. Rakesh Rachwani is the founder and managing director of Compass Financial Solutions, UAE. From 4 employees in 2006, he has grown the team to over 150 members and is a well-established insurance broker in the UAE. Compass Financial Solutions embodies the vision of protecting clients from any risk that they take on a frequent basis by providing insurance solutions to them and their companies. The company offers bespoke life insurance and general insurance solutions with various partners globally. Mr. Rachwani has an experience of more than 27 years in financial planning industry and has an in-depth knowledge and expertise of life insurance, investments, and wealth management. He has been helping his clients create a financial safe house by educating them, guiding them through the complex financial world, prioritizing their needs with his unique life cycle approach, and creating small action steps to make their money work for them. He primarily specializes in life insurance, succession planning, and distribution of wealth through creative strategies in order to be able to sustain wealth through generations. Thanks, Rakesh, for joining us. The floor is all yours for the next few minutes, and please take us through your presentation. Thank you.
Thank you, Vijay, and appreciate your such a generous background. I'm glad and honored to be a part of this dignitary group. And thank you, Mr. Ajmera, to invite me on this, launch of your Ajmera Capital. It's a real pleasure to be a part of this. And, I'm sure everybody's heard through. I was also on off hearing so many things. We are so used to now webinars. It becomes very difficult to digest and grab everything which is possible. So I'm trying to keep as brief as it could be to just give you a small preview of what we do. But the most important thing, like Prashant mentioned, is that Ajmera Capital, we are looking at exploring the monies which an Indian resident can invest into the global world. And I'm sure you have many experts talking about different products. But I'm going to touch upon a very small product today. I'll just give you run through a very small, brief presentation. Prashant, can I share my screen?
Yeah, I just made you a co-host, so Rakesh, you can share it.
Excellent. I'll just do that. Just allow me a second. I'll just do that. Okay. Sorry for the mess.
You're okay or having some problem or?
No, that's about it. It's just I wanted to be sure about what I'm showing through. Okay, so I'm just going to quickly go through, what Guarantee is, and we are based out of Mauritius. We established in 2016. We have our locations in Dubai, where I live for the last 28 years, Mumbai, Kenya, where I am at the moment in my Nairobi office. We basically call ourselves bridge between world-class fund managers and financial product providers, connecting them to the B2B network. So one of my key roles in India has been not only talking about the products, but also educating them about LRS and introducing them to the global, different kind of global investments throughout the world. So we open doors for them for US dollar products globally. Well, you've already gone through this, so I'm not going to, talk about this more. And we all have gone through what Prashant started with. It's why people are investing money abroad, whether it is a diversion towards risk, whether we call it as an investment which will act as an insurance against wild swings in my domestic market. Because you look at every emerging market, currency fluctuations is a very deciding factor in how much money you actually make. And of course, it helps me hedge the depreciation of the Indian rupee from time to time. So these are the reasons why we invest in dollars, right? I wouldn't want to show this. People have seen this again, what has happened to the INR. This was updated a little while ago. So you've seen in the last 10 years what has happened to the dollar INR scenario. We're talking about almost a 60% depreciation in the rupee. Well, LRS, I just answered a question on the chat where Sham had just asked me whether LRS can go into any unlisted or listed equity. Well, LRS can go into anything. It has got 13 different categories. And if you go on the RBI website, it can allow an Indian resident to invest up to $250,000. And they can do this very easily now with an AS2 form, which is available. And it can go multiple investments into listed, unlisted debt instruments, whether it is arbitrage, whether it is anything which is possible, except where they cannot borrow money in the dollar. So there are certain restrictions which you need to be absolutely sure about. But as long as that is quoted and is reported, that investment, you can invest anywhere, including properties and including XYZ, where, as long as you are able to report that investment. So I'm sure there is a lot more information on the RBI website. And even Prashant has some articles written on it in the past.
Now all those websites are there on our Ajmera Capital. Link
Correct.
is there.
So absolutely. So, you can definitely have a look at. I will not touch a lot of products. And of course, there are different styles of products which are available. So again, I wanted to thank Prashant to give me an opportunity to briefly explain which is the most common investment today an Indian is making in the local market, which is an SIP, right? Now, we are all aware of SIPs, which takes a large chunk of our money from the markets. It is available for a common man. They can go to any platform, any fund, and pick up SIPs in India, right? What I'm going to talk to you about is an SIP in US dollars. It's as simple as buying an SIP in India. So we exclusively hold the Investors Trust, which is is called ITA, more commonly the Investors Trust Assurance. It is licensed by the Cayman Island Monetary Authority, CIMA, as we call it. Has about 55,000 clients around the globe, close to $2 billion of assets under management, and we are servicing clients in about 40 countries. So this is a platform which we use for mutual funds in SIP, in dollars, pounds, or euro, and also in Japanese yen. Where are they regulated? They are regulated in Dubai, DFSA. They are regulated in Labuan, which is in Malaysia. They are, of course, regulated head office in the Cayman Island, which is the CIMA. Now, Cayman Island, people do look at it in different ways, but to let you know, it is the fifth largest authority who is managing funds in the world as of today. It comes even above Paris if you look at the amount of assets under management held under Cayman Islands. It is house of over 350 tier 1 and tier 2 banks, which is again makes it the 5th largest in the world. Okay, these are the offices where we are in ITA. So right from all the American jurisdictions, including Middle East and in Hong Kong and Kuala Lumpur, we are able to serve our clients almost 21 hours in a day. It is rated by AM Best as AX, and the capital adequacy is about 552%. So again, it has got the right platform to hold as many thousands of mutual funds as you can think about globally, including some of them who are working in India, like the Sundaram midcaps, etc. To just look at it, it is a boutique state-of-the-art online platform. I mean, I've had cases in the past where the policies or the investments are issued in less than 4 hours. When I say policies, we are so used to life insurance that I always use the word policies. These are pure 100% investments. They got no linkage to insurance at all, but they are 100% unit link plans without insurance. Anyways, it has 2 large custodians, Brown Brothers Harriman and Bank of America Merrill Lynch. Together, they hold close to $12 trillion in custody. So very, very large custodians of the world. I'm going to, like I said, 2 very simple formats of the products so that it is easier for you all rather than going through lengthy presentations. So we have one product which is very, very simple. It is linked to the S&P 500 index. It is a simplistic form of an SIP, but comes with capital protection as well as return protection. So if you look at it, we offer the 10-year, 15-year, and a 20-year term, which means that your maturity is at 10, 15, and 20. 10-year gives you 100% capital protected, and I'm going to come back to you which are the banks who do that. The 15-year comes with 140% guaranteed, which means that it gives you close to 4.4% annualized return, and similar to the 20-year plan. It is giving you 100% participation in the growth of the S&P, which means that the downside risk has been protected. That means your capital and the minimum return, and anything above that belongs to the client, right? So, and again, very, very small. We're talking about $200 a month. So extremely robust and available to even a common man. And that's what this plan does. Well, S&P 500 index, I don't need to go much about it. We all know where it invests, the top 500 companies of the world. From the Apple and the Microsofts and the Amazon, this was the one which was the sector breakdown, which we had done a couple of months ago, where the money was going. Of course, it keeps on changing as the weightage on S&P changes. And as we all know, Tesla is coming in, so a lot of people are buying in Tesla, right? So this is what the S&P index looks like. Okay. Now, this is a very important fact. A lot of people do ask me that, Rakesh, capital protection guaranteed. Who's giving this guarantee? Is it the Investors Trust? Absolutely not. Investors Trust is just a platform which offers you these funds. It enables you to buy anything as long as it is as an ISIN, as a mutual fund. The 500 index fund comes with a capital protection and guarantee from Citibank, HSBC. I mean, these are all the big names which are available. The contract says that it is in writing, it is in black and white, and it is for you to see that these are all A+ rated banks of the world. And if these fall, we have other things to worry about than our savings plans, right? Anyways, the average return in the S&P in the last 15 years, if you take a block of 15 years, has been 7%. So definitely these are taken care of. They have never seen a negative return in a 7-year block period. Again, I have records from 1956 when the S&P was launched. So it goes back almost 70 odd years. Like I said, it's 100% participation in the growth of the S&P index, and it's a flexibility to invest in SIP that is monthly or lump sum. That's up to the client. Of course, we'll go through all the questions in the end. Now, as I said, it's a platform for you to buy into a capital protection, or you can have an open-ended structure. An open-ended structure is called the evolution, where you can buy any of the mutual funds available. I'll go through some of the fund managers they work with, just to give you a little idea. Again, very flexible, from 5 to 25 years of option. So for a short-term capital savings to a 25-year retirement plan, it could be anything. There is no bid and offer spread on regular investments, just like our mutual fund or SIP in India. Absolutely zero entry and exit loads, and flexible options to pay, right? And to buy any funds in any other currency. This is the best part which it does. And that is what Ajmera Capital is here to promote. We are talking about global investments, giving you an opportunity to invest in the best companies and the best platforms of the world. Some of these guys, I don't need to give an introduction to. Investec, Templeton, BlackRock, iShares, of course, Man, Permal, MFS, Pictet. These are some of the names. They deal with over 100 fund managers. I could not fit more than these in a small screen like this, right? So this is where we are, and this is what Guarantee does. I'm again thankful to Prashant to give me the opportunity, and I didn't want to take a lot of my time to give you so much data. So we are available on Mr. Ajmera's platform. Mr. Ajmera is, like I said, is the fulcrum of a lot of things we are doing together to educate the Indian residents on global investments. So there we are, and I'm open to questions if there are any.
Thank you. Thank you. We'll do the question at the end. Vijay, now the next speaker we have it is Grant Hicks. Please do the introductions and let's go.
Yeah, we are running a little behind. Thank you very much, Rakesh, for the insight that you've shared with us. Without wasting much time, let me get right to the next speaker. He's Mr. Grant Hicks, and he's joining us from Canada. It should be around 3:30 in the morning with you, sir, and chilly sure. So warm welcome to you, Mr. Grant. He's a practice management expert and president of Advisor Practice Management. He has published 3 books and is a keynote speaker at conferences and workshops of financial advisors. He has spoken at major financial institutions in Canada, the United States, and Asia, and he coaches individual financial advisors and teams on perfecting practice management processes for ideal clients, prospects, and centers of influence. His Guerrilla Marketing for Financial Advisors books are sold as part of the Guerrilla Marketing series, which has sold over 21 million copies worldwide. His writing and speaking assignments have made him an expert resource on practice management for financial services and who want to build an elite future-ready financial practice. Grants combines financial advisor clients manage over 4 billion asset managed under management AUM and earn over $40 million combined. Grant played professional hockey in Europe and has been before he started out in the financial industry. He has a big jump from hockey to finance. Welcome, Mr. Grant. The floor is yours for your presentation. Thank you.
Thank you for the introduction. Good morning or good evening, everyone. 2 quick questions. First off, can you see my screen?
We'll take the questions at the end, sir. So please go ahead with your presentation.
Yeah, we can see the screen, Grant. We can see the screen.
Perfect, and you can hear me perfectly. Awesome, thank you very much.
Yeah. So we got just one quick thing. We are along. Our website is going to go live on 6:30, so that for 1 minute, if your presentation is going beyond, we will stop it and then we'll do the countdown, launch the portals, and then we'll continue with the presentations.
Okay, and about 10-15 minutes to talk today?
Yes, that's right.
Perfect. Well, thanks everyone for joining. So what you're going to get today is we're going to talk about how you're going to acquire a few more ideal clients. I'm sure everyone on this call would love to acquire a few more ideal clients, but also deliver more value to your existing clients. So thanks, Prashant and your team for having me today. I want to give everyone some value. So the first thing I want to give everyone is a copy of my ebook. So if you want to shoot an email to Prashant or to myself, we'll get you a copy of this ebook, which is 5 years worth of research on what the best advisors around the world do. You see, I'm on the judge and the jury for the Wealth Professional Awards. I see what the top advisors do. I coach top advisors, and I was one. I had a practice of over $150 million of assets. So I know what it takes to run and manage a successful practice, and I want to share some ideas with you today. So let's get going. So I truly believe the more value you give, the more valuable you become. The more value you give, the more value you become. You see, I was traveling through North America and Asia speaking, and one day it hit me clear as day that the most successful advisors were doing the exact same things in the exact same way. And it was the exact opposite of what all the other advisors were doing. And I took that information, I put that in the presentation today, and that's what I want to share with you is what are the most successful advisors doing to grow their business? They're delivering more value. And so what I want you to get in your mindset is 84% of the wealthy engage emotionally first and logic second. 84% engage emotionally first and logic second. So I want you to write that number down because that's a critical number. Whenever you're making an offer, whenever you're planning to do a webinar for clients or prospects, whenever you are delivering content to your clients, a majority of it is logical, not emotionally engaging. And that's one of the complete opposites that I see. So how can you be more emotionally compelling? Well, I'm going to help you with that. So you see, the financial industry, which I've been in for 30 years, operates on product, services, and performance first, that eventually leads into planning advice, that eventually gets to an emotionally compelling aspect. And the best advisors start off with an emotionally compelling offers that lead into planning advice that deliver more products, services, and performance that we're talking about today. It's the complete opposite of what we are seeing in the industry. Now, don't get me wrong, product, services, performance, they're critically important. You need that to be successful. But starting with that doesn't really help. So here's my couple of thoughts for you today. We know that all successful investing is goal focused and planning driven. All failed investing is market focused and current outlook driven. Now you need that to be successful, but that's not where you start. We want to start to talk to people about engaging them. So my question for you is, I take advisors from earning, let's say $500,000 a year to $1 million. $1 million to $2 million. How do I do that? Well, I'm going to give you a simple idea today to help you. I want you to write down, what is the value add that you're going to deliver your best clients next year? And what did you deliver to your best clients this year? What additional value are you delivering to your best clients in the next 12 months? Your best clients, your best prospects. I want you to write that down. I want you to take a minute and think about, how can we add more value and deliver more to our best clients? Write that one idea down. Take a minute to do that. Now, don't feel bad. Even the best advisors I work with have trouble doing this because we're doing the same thing over and over, expecting different results. So if we want to acquire a few more ideal clients, I want to ask you another question. What are your best prospects not currently getting from their advisor or financial institution? What are they not currently getting? Why would they switch to deal with you? Why would they give you all the wealth? What are the three things, 2 or 3 things they're not currently getting? I just want to take a minute and write that down. What are they not getting? Now, you didn't think you're going to come to my webinar and not work. So I want you to work on your business. I want you to think differently. So I'm going to ask you a few questions. Here's what I see that the best prospects, the wealthiest people in India are not getting. How many of those best prospects have clarity around their future mapped out on paper? All of their values and all of their goals clearly mapped out on paper. What percentage of those prospects have that clearly mapped out? Second question is, how many of your wealthiest prospects are financially organized in all 7 areas of their life? Tax, estate, investment, risk, insurance, debt, and cash flow. I will say it slowly. I'll show you. Tax, estate, investment, risk, insurance, debt, and cash flow. How many people are completely organized in all 7 areas of their financial life? How many people understand what they pay, but more importantly, what they get for what they pay? It's not about what they pay, it's the value that they actually receive for what they're paying to their financial advisor institution. So one of the concepts that I created was called a fee audit, which shows you what you're paying, but more importantly, what you're getting for what you're paying. And a beneficiary audit. We had a gentleman talking about insurance and estate planning earlier, making sure that all your beneficiaries is correct and all your investments, all your insurance, it coincides with your will, and we do a 1-page summary of that. Would that be valuable if you had that summary? So how many people understand what they pay, and how many people are clear about their estate all on 1 page? And then, you know what, I got an advisor grant, I'm good, thank you very much for calling or asking. So that's great. I just have one question for you. What's the probability of success of reaching all of your goals with your current comprehensive plan? 60, 70, 80%? Where do you think you currently stand? If I had all my goals mapped out and I had a comprehensive plan, I'd be able to tell you that. So what we're seeing is that they don't know what they don't know. They don't know they don't have all their goals mapped out, do they? As Roy Disney, one of the founders of Walt Disney, when your values are clear, your decisions are easy. When your values are clear, your decisions are easy. So we need to have values and goals mapped out. And then what's the probability of success reaching all your goals? And have you stress test your portfolio against all of your goals? How do you do that? What does that look like? I haven't done that. Would that be valuable if we connected on a 15-minute virtual coffee, show you how to stress test your portfolio and show you how to get a potentially higher probability of success reaching your goals? Would that be valuable to you? Great. Let's have a virtual coffee. And then the final thing I'm going to share with you today is how to build your own network of professionals, because, Mr. Ajmera is a lawyer, runs a financial firm. I'm going to talk about the Ajmera network of professionals. I'm going to show you how to build your own network of professionals even deeper in a very simple format. So when I ask these questions, how many people have clarity around all their values and goals on paper? Clarity is the number one thing people want, especially during a pandemic. They're not even clear of what they would like to accomplish. So clarity is the number one thing people want. Getting complete, whether you use the word complete, holistic, comprehensive, these are key words that will trigger the emotions of people to saying, yeah, you know what, I'm not getting that. And we'll build an implementation schedule to help you get organized in all 7 areas of your financial life. We'll show you complete transparency. We talked about regulations a little bit earlier. Regulations are critically important to be successful in financial business, and showing transparency, beneficiary audits, fee audits, making sure that you understand what you're paying, but more importantly, what you get. Then we'll talk about comprehensive planning, which most people haven't seen before. I mean, if you do one thing, show a sample comprehensive plan and probability of success, or a sample stress test, and just send that out to people saying, hey, I'd love to just do this just to show you some of the value we can deliver. All of a sudden people are going to go, oh, that's interesting. I've never seen that before, because they don't know what they don't know. You're taking them from they don't know what they don't know to now they know what they don't know. And they're dealing with their current advisor. They're not getting any of this. Now, how do you feel when you're paying for something and not getting it? The cost is essentially the same, but you're going to deliver more value. you're going to engage them in a conversation. So then building your comprehensive advice process, putting the coordination advice, and then eventually getting to a legacy. I won't get into too much detail today because of limited time, but if you have a family conversation, that is where the key of the wealth is, especially in wealthy families and business owners. Eventually you get to that family legacy planning conversation. You see, the financial industry talks about how many clients do you have? How many households do you have? They never talk about how many wealthy families you manage. You manage less people, but larger groups. Wealthier families are what you want to target. Okay, so we want to help you by giving you emotionally compelling questions to ask. Would it be valuable to get clarity on your goals and your future put on paper? Would it be valuable to get organized? Helpful for you to understand the total cost of investing advice. These are what we call gold bricks. These are just offers to people, emotionally compelling offers to engage them. So these gold bricks can help you deliver more value. So when you're talking about, showing and illustrating people, you can see that we're helping people get organized in all 7 areas of their financial life. We're doing not only the investments, but the planning and advice that goes along with it in the emotionally compelling way. So my question for you today to think about is, what are your offers? What are your questions? What are your words that you're using to engage the wealthy people? And this might give you a few clues to help you engage a few more wealthy people. So I'm going to finish off by giving you one quick idea to help you. So when you're talking to your clients today, this week, I want you to ask them 3 questions. If you use an agenda, fantastic. I highly recommend using an agenda. Put these 3 questions on the agenda. Here are the questions. Before I begin, I'd like to ask you a question. If I were to meet a group of successful business owners like you, where would I go to meet them? How would I find them? How do I connect with them? I'm just curious. It's a marketing question. I'm just trying to find more successful business owners or entrepreneurs like yourself. And you will get some of the clues into how to market, how to connect, and how to meet these people. They'll give you the clues on how to find, meet, and connect with these people, especially during a pandemic. Sometimes you'll get, I don't know, a good question, but sometimes you get some clues into how you can market to these people. This is the best marketing question you'll ever ask, because I don't know how to find a group of doctors in Mumbai, but I know how to ask a group of doctors how to find more doctors in Mumbai. So asking these questions. The second question, by the way, do you know that we offer speaking services to our clients? Yeah, we do webinars all the time, and we've got access to some professionals, just like we've heard here on the video today. You've got access to great speakers. Access them so that you can get them in front of your best clients and prospects. Do a webinar. And then the third thing is, about the Ajmera Network Professionals. No, what's that? Well, we will work with your team of professionals, or you can tap into our network of professionals, and we will keyword coordinate these professionals for you. So, and you take them through a very quick little questionnaire. Are you happy with your lawyer? Are you happy with your accountant? Would you refer them? What's the name of your lawyer? What's the name of your accountant? What's the name of your mortgage specialist, et cetera, et cetera, et cetera. So lawyers and accountants are obvious. You need them to be successful as part of your practice for financial advisors. But the rest of them, real estate, commercial real estate, mortgage, these people are what we call money in motion people. They run across people when there's money in motion. Yes, go ahead.
Grant, I have to stop you now. We have to just do the countdown on this one, and then we'll continue. Just give me a few seconds. Can you stop sharing your screen, please? Okay. So now we're going to go on. Oh gosh. Oh no. I think it's already been.
All the speakers, if they can unmute themselves and join us for the countdown, please.
Can you see the screen now, Vijay bhai?
Yeah, it's visible.
Which screen you are seeing? The website?
I'm seeing your home screen. You have to go to the web screen.
Okay. Right. So now we do the countdown.
Yeah.
Robert, I'll ask you to, Robert and Grant, to do the countdown. 10,
9,
9,
8,
8,
7,
7,
6,
6,
6,
5,
5,
4,
4, 3,
3,
2,
2,
2,
1.
1.
1.
And it
Bravo!
So it's going to come up in a second.
There it is.
Capital.
there you have it, sir.
Congratulations and all the best.
Congratulations to everybody.
Congratulations.
Thank you.
Congrats,
Thank you.
Mr. Ajmera.
Congratulations.
I just think it's loading it up. Yes, now it is there.
It's live now.
Yeah, so now you see the websites.
Yeah.
So here you see this website. I'll just take a minute. Basically, it's our homepage. And has information about us. There's the global investing has the information about the US stock market. You just heard about global portfolio management, global stock market, second passport, global real estate, and startup. We have all the knowledge tabs about the global news, global investing links, Bombay Stock Exchange forums, ebooks, downloads, and so on and so forth. And if you wish to be associated with us, then you can join it here. So that's the websites. We have it. Thank you very much, guys. Sorry to interrupt you, Grant. Please continue.
You'll have to unmute yourself, Mr. Grant.
That's fantastic. Congratulations. That looks fantastic. Must be exciting.
Thank you. Thank you. It's all because of you guys joining, and it has become possible to do it in a grand way.
That's great. Well, my message was simple today. Hopefully you got a bit of some ideas on how to engage in an emotionally compelling way. So asking critical questions. So my question for you to finish off with today is, what are your offers to your best clients and prospects? What are your offers to your best clients and prospects? They are emotionally engaging questions. So hopefully I gave you 5 questions to start asking people. Number 1 is values and goals. Are you clear on your values and goals? Number 2 is helping you get organized in all 7 areas of your financial life. Number 3 is a fee audit or beneficiary audit. Number 4 is stress testing or probability of success. And number 5 is the Ajmera network of professionals. So there you go. Hopefully we've given you some value today so that you can go and find and acquire a few more ideal clients to help them manage their wealth and their future. Thanks for having me. I appreciate it.
Thank you. Thank you, Grant.
Thank you so much, Mr. Grant. And despite the time difference, we appreciate that you've taken out time to be with us and also helped us launch the website. Last speaker for the day is none other than our most dearest one, Dr. Robert Barnes. He is the CEO of Turquoise Global Holdings, an European trading platform and group company of London Stock Exchange Group. He is also a chartered fellow of the Chartered Institute of Securities and Investments. Turquoise Global Holdings, an investment firm authorized to operate a multilateral trading facility, is based in the City of London, majority owned 51% by London Stock Exchange Group and 49% by 12 major banks. Members include a wide range of global banks, domestic brokers, specialist trading firms, and retail intermediaries. Members with a single connection to Turquoise can trade shares and depository receipts and exchange traded funds, that is ETFs, of 19 European countries for settlement into a respective country's central security depository. Prior to joining LSEG in 2013, Robert worked at UBS, a Swiss investment banking company, for more than 19 years as managing director equities and founding CEO of UBS Meet MTF. His industry's role includes serving as chairman of the Securities Trading Committee of London Investment Banking Association, member of the UK Financial Services Authority's Capital Markets Senior Practitioner Committee, member of the European Commission's Clearing and Settlement Expert Group. He holds a BA from Harvard and a PhD from Cambridge. Privileged to have you with us, sir, today. I give the floor over to you for your presentations. Thank you.
Well, thank you very much, sir. And good afternoon, ladies and gentlemen, and congratulations on your auspicious launch today. It's a great privilege to be listening to the great experts about India and international investing. And thank you for inviting a humble practitioner to address such a distinguished audience. I would like to introduce Turquoise, the international arm of London Stock Exchange Group. I will explain what is Turquoise and how Turquoise can help brokers and investors access international markets. First, let us recall that the stock exchange plays an important role in the real economy, converting risk capital to working capital, offering issuers a wide range of investors to join their shareholder register, and at the same time offering investors choice of investment to gain exposure and diversify their portfolios. As a stock exchange, we do not get involved in financial promotion. We do not say which stocks to buy or sell. That's the role of the expert brokers that you've been listening to today. But as a stock exchange, we do help investors when they decide to buy and sell to get their business done. Progress is an equation, motivation plus ability. And while the brokers are providing you advice for motivation, as the stock exchange, we are in the enabling game. And this involves trust. At London Stock Exchange Group, we start with our principles of integrity, innovation, partnership, excellence. And our aim is to be the international listing and trading partner of choice. How do we do this? Very simple. Our approach is to raise visibility, encourage new members, and to innovate with customers, and that's you. So today is my honor to join this distinguished event. Turquoise as the international arm of London Stock Exchange Group. With a single connection to London, a broker can offer their clients access to more than 4,000 securities across 19 UK and European countries. The members of Turquoise today are global banks, domestic country brokers, specialist proprietary trading firms, and retail intermediaries, wealth management intermediaries. The benefits of brokers participating on Turquoise are, number one, it provides a single point of access. One of the great features of Europe as a region is that there are more number of developed country markets, but this can be complex with so many countries, and it can be expensive to connect to every single stock exchange and to license every one of the data agreements. With Turquoise, one can use the same connection to London to access the stock universe of 19 countries, and that can include growth companies like the AIM growth market. If we look across all of the European small medium enterprise growth markets, the London AIM market is still representing more than 60% of all the capital raised in Europe. And you can trade a number of those AIM stocks also on Turquoise. The Shanghai London Stock Connect, where it is possible to trade A-listed Shanghai Stock Exchange stocks that list in London that are also able to raise hard currency in the only other market in the world outside of China. You can also participate in ETFs, European rights, and the full panoply of blue chips, mid and small caps. When we think about the story of how we got there, it's really about two megatrends. We start with demographics, and people are getting older and living longer, which is a good thing. But of course, as we think about our long-term Social Security or thinking about investing for children going for education in universities many years in the future, this is requiring investment in a diversified way. The second megatrend is the fact that in many developed economies, interest rates have become very low and there is a demand for growth. And equities tends to be that asset class that offers that selection of choice. When we take a look at 2001 in Europe, the authorities commissioned a report called the Wise Men Report. You can Google it, the Wise Men Report. And if you go to page 74, there were a number of very important examples. They said, if the average individual has a career of 40 years and they will invest so they can retire on 35% of their final salary as a pension, if they're investing and they are getting 2% real return after inflation, that means for that 40 years, every year, the investor must put away 20% of their gross salary to get that return. Now, not many investors are doing so. And as a result, there was the introduction of, in Europe, a regulatory framework called MiFID, the Markets in Financial Instruments Directive, that means it is now possible to trade Europe as a region. And Turquoise is one of those vehicles that allows you to do it through the single connection to trade all the countries. Now, what's fascinating in these 4,000 plus securities that are available to trade on Turquoise, not every one of them trades every single day. Let me give you an example. In 2013, maybe 1,600 stock symbols were being actively traded in a month. But today, that has grown to 3,000 some symbols. And the question is, why does that matter? Well, when we consider that across all of Europe, all the stock exchanges, all the venues like Turquoise, every day, 80% approximately of all the value deployed on all the exchange order books, 80% is concentrated in just 300 blue chips. So the fact that the number of symbols has increased from 1,600 to nearly 3,000 in terms of actively trading on Turquoise suggests two things. Number one, investors seeking growth are, in addition to blue chips, looking for mid and small caps. And number two, those investors are succeeding in being able to buy and sell those securities on a single point of access platform like Turquoise, which is the international arm of London Stock Exchange Group. The second reason why it's so interesting to be able to access Turquoise, as the international arm of London Stock Exchange Group, we also are adding new ways to buy and sell securities over and above your traditional stock exchange. So if we think about the traditional lit order book, where you can actually see the bid offer price, you could sell it to, you may pay for, you can also do that on Turquoise, and the Turquoise prices are very similar to the prices that you'll see on the various stock exchanges. But you also have the ability to use a dark pool. And what is a dark pool? It is really a venue that allows you to place firm orders where pre-trade the price and size is not displayed. Now, why would you do that? Well, the advantage to using a dark pool is it allows you to get close to the market without moving the market price. In fact, what we've been doing electronically is automating what sales traders have been doing for years. If you think about the institution calling a sales trader, and in 1 year, they've got a buy of 900 shares and on the other, they've got a sell of 700 shares, well, it seems fair to maybe cross up the 700 shares at the mid price to give both the buyer and seller price improvement, and both of them fairly getting a better result. But of course, at that instant, the sales trader has the two orders. It is only the sales trader that knows the price and size. The market does not know. The sales trader is a human dark pool. So with automation, we've been able to automate this, but we've also looked to listen to the big asset managers, like the pension funds, the insurance companies, who want to trade large size. And when you consider one of the features of stock exchanges worldwide that are very efficient electronically, all stock exchanges tend to shrink average trade size. Why? If you think about having a buy, lots of shares on the bid, and someone sends in a small number of shares on the sell, you get a small fill. And over, stochastically, you will get small size. So in UK and Europe today, the average size per trade on the stock exchange is roughly about 10,000 euros per trade or less. So that's the same as 0.01 million euros per trade. So imagine if you're a big fund and you want to put 1 million euros into the market, or 10 million, or 15 million. Well, you would significantly suffer market impact, and that is a very significant negative slippage cost that reduces your long-term returns. But if you use a dark pool, you can place large size in the market without moving it. And what we've decided and worked together with the user community, including the largest asset managers in the world, through Turquoise and Turquoise Plato, we have become the largest midpoint and electronic block trading venue. And I'm very pleased and honored to say that after 8 years of working, 2020 is the first year where the block trading electronically on order book at the midpoint offering price improvements has now become mainstream. 2020 is the first year where the majority of the value in the dark pool is through these electronic block trading, and this is tremendous. The next way brokers can benefit by participating on Turquoise is through the visibility of what's happening in the market. So while pre-trade dark pools may not be showing price and size, post-trade we reveal everything on real time. And with the regulations that came in 2018, we are now price stamping to a precision of 1 microsecond, 1 millionth of a second. So if you can imagine that 1 microsecond time precision with a maximum drift of 100 microseconds, and we reveal the trade instantaneously, well, that post-trade transparency becomes pre-trade transparency for the next trade. Imagine if you're looking to go and buy a house, the real estate agent will give you the pre-trade price, but if you're the investor and you know the post-trade price, the sales price of the house next door, do you not feel more informed to make a better decision? In fact, at Turquoise and London Stock Exchange Group, it is our philosophy that the best way to protect investors is to inform the investors. And even if you are an individual or a wealth management customer, and you may not be putting these 10 million euro individual trades into the marketplace, by looking at the single Turquoise data feed, you can have an immediate view across the entire Europe of what the big institutions are doing. You can see the same information as the wholesale markets, and that provides a level playing field. You get an idea, why are these big trades in this stock happening at this particular time? It's information rich, and it makes you a more informed investor. The final reason to participate is that we hope, as the brokers that are serving investors learn more by doing on Turquoise in the UK and Europe, we can also explore how we may work together back at home in India and other countries to share those insights to see if we can come up with win-wins with the local markets. So with that, ladies and gentlemen, I thank you very much for listening and allowing me to tell you about Turquoise, the international arm of London Stock Exchange Group. Thank you very much.
Thank you, Robert. It was very nice, very exciting
Oh, thank you.
to see. And as I understand, I read it from your website that your platform is also being launched in Europe market today as well.
Well, thank you, sir. Thank you, Prashant. Yes,
Yes.
30th of November, we are launching Turquoise Europe because the other big theme you may have been reading about Brexit, as we get to the end of 2020,
Right.
that's the end of the transition period, and 2021 will be Brexit. And so Turquoise Europe will provide continuity of service to investors. We do the hard work to make life simple. Thank you.
Thank you very much. Thank you. So once again, really, really exciting news. And with the London stock market, you are launching your portal in Europe, and we are launching our little portal here in Ajmera capital in India. What a coincidence. But it was really a great insight to make the level field to bring it to the investors that you are getting the same information. So it was really exciting. Anyway, thank you. And I think now we start with the question and answer with all the audience. If they want to raise a hand and ask questions, please go ahead and do that. You can specifically ask any of the speakers in any language, Hindi, Gujarati, or English, and we'll be more than happy to answer. So all the 6 speakers are here. Please go ahead with your questions.
Sir, we have a few questions which came in during the presentation.
Yeah, please shoot it, please.
Yeah, I'll take those first, and then we'll keep the house open.
Yeah.
Sitashwa, there is a question for you from Shyam. He wanted to ask, what are the returns on the US dollars cash management?
Yeah, so on the cash management product, the returns that we are working on is roughly about 2.5 to 3% on the dollar.
On the dollar?
Yes.
All right, I hope, Shyam, you've noted that. Shyam also had a question for Himanshu. Himanshu, he wanted to know, does LRS allow investment in unlisted and unregulated instruments?
Right, Shyam, thanks for that question. I think Rakesh partially addressed it. The clear answer is yes. There are, of course, a couple of ways this can be accessed via the LRS route. One is, of course, directly getting into the cap table of the issuer. On Crystal, however, we do it a little differently. We leverage our fund model, which allows us to actually fractionalize these offerings a lot more. Very recently, we did one for Grab Holdings, which is the Uber or Ola equivalent in Southeast Asia, for as little as $25,000 per ticket. But the simple answer is yes, and yes, there are a couple of formats one can consider out of India while wanting to get into this market.
Thank you. Rakesh, there is a question for you also. I'm sure you read it there. Is cap protection applicable only at the end of the selected structure, or how does it work?
Very interesting question, of course. Yes, it is. See, it is like a commitment, right? If you're investing in a product, you are making a commitment towards the capital, and they are making a commitment towards capital plus the amount they're guaranteeing. And that is applicable to the end of the term. So I hope I've answered both. And of course, if there are any more clarifications, I can go on a private chat and do it. But in nutshell, if you promise to pay me $100, I will pay you $140 at maturity. But let me give you a slightly different perspective. 10 years ago, clients who invested with me, currently, in 10 years, the S&P has actually grown 300%. So they are not waiting for the 4% return. They've already started to exit. S&P 10 years ago was about 950 points. So today at 3,600, they won't wait for the capital protection to trigger. They already exit. That's your call, right?
So, thank you, Rakesh. These were the basic questions from Shyam. And I think it will be better for Ajmera sir to trigger a few more thoughts here.
Yes, anybody else is coming up with the questions? I think Navdeep wanted to connect with the Rakesh, so I'll do that introductions in personal chat. Now the questions is to all of you together. With respect to the, I think what we have realized and what message we wanted to send across is that we all face the similar problems with respect to the awareness in the market amongst the investors and amongst the professionals. That was my experience. Are you guys also face the similar problem? Himanshu, Siddharth, you can, or Rakesh, you can answer the same question, please.
Sure. So maybe I'll go first. As I mentioned even during the brief presentation, I think that is definitely one of the concerns we've seen in the market. It's quite interesting because on one hand, people are spoiled for choice. Access is getting easier, right? But there are a few things which are different with respect to how investments are done and the risks associated with them. So that is definitely one of the areas we want to address with our financial partners and not only with investors. So getting educated about global markets, how they work, and the risks associated with things is absolutely a key area for us to address. So, and we've definitely seen part of that.
Right. Yeah, exactly. I think Siddharth.
Yeah, no, absolutely. I completely agree with what Himanshu is saying. One is, I think India, while Indians are known for their savings rate. Indian savings rate has always been very high. But I think most of the money is in fixed deposits and savings accounts. So it's not very efficiently saved
Right.
because it is for the most part not invested. So there is a fair degree of education that is required for participation in financial markets in general. And on top of that, what we've seen is because there has not been a great deal of education on the regulatory aspects when one has to invest overseas.
Right.
I think that's a clear gap that we have sort of seen, and that's not just a gap among the investors. That's a gap among practitioners as well.
Practitioners as well, right?
Banks don't, while banks know at bank level, they know that, yeah, you can send money under LRS and make investments, but a lot of bankers do not know this. And,
Right.
The largest of Indian banks are very branch driven and very offline in some sense, right? So from that perspective, I think huge degree of education is actually required among professionals first, and then automatically it will percolate to the
Right. Rakesh bhai? Rakesh.
My perception is slightly different. I mean, I put it this way. I think very wisely when we were seeing all the ads ki mutual funds zaruri hai, and then suddenly someone came up with a punchline saying advisor bhi zaruri hai.
Right.
What happens is I feel that we all have to elevate ourselves as an Indian advisor to look at two things. One is the I would say reluctance of the Indian advisors to advise on dollar products because of the myth, which they don't know whether they are regulated to do or not.
Right.
So I think when you are an advisor, when you are a regulated advisor, somebody who does things by the book, there is no clear guidelines available by any foundation who says that yes, there is a guideline by SEBI, RBI, or a governing body that they allow you to even advise on international funds. I think if we are able to address that, then a lot of these myths to the advisors will go away. And once the myths go away, they will start educating the clients for diversifying their currency risk, which is currently not happening.
Currently not happening. Yes. Yeah.
Let me ask it. Let me add a point there.
Sure.
So,
Grant.
So I do feedback. So I get advisors to get their clients together on a webinar, and we do feedback with the clients. And I ask the clients, what do you value the most about your advisor? And it's very interesting. On a regular basis, they say, you know what? I could always ask my advisor questions, and they're always there to teach me different things, and I'm always learning something, so I'm comfortable because I have that advisor there. When things come up, when things change, when they have questions, they have that advisor there to answer the questions. So the reason why they have that advisor is because they have an ongoing educational component. They know that with the advisor, and that's the big part about the trust. So education is very important, but it's an ongoing process, isn't it?
Yep, absolutely. Yes, similarly, my experience is the same as well. When we were, my background being a lawyer into the residency and citizenship by investment, and we feel the same way that when it comes to the advisors and HNIs making an investment outside for the second passports or a residency purpose, we face the similar kind of a problem or similar kind of a knowledge understanding is not there. Regulatory basic questions, basic rules of remittance or money out of India is not there. Taxations and the other parts is like quite far away. So we feel the similar way. Thank you very much for applying. Any other questions coming from anybody else? Can raise a question, raise a hand, and we can take. Rajesh Minoka, I think if you have any questions, I can see you are there. Sham.
I have one comment, Prashant.
Yes, go ahead, Rakesh.
I'm looking at Dr. Barnes, and I just want to know and I want to tell him that his smile is really contagious.
We are smiling since 5 o'clock.
Absolutely.
Sir,
amazing.
you are a gentleman. I can only share my sentiments and share them back with you. Thank you.
My pleasure. My pleasure.
Thank you.
Anything you want to ask?
There was a question, I think, what is that, Mr. Ajmera? Do you have a time to address the topic on the link between Grenada citizenship and, yeah, Navdeepji, that's the residency questions. We will do it separately. I'll do it with you on the Grenada residency. Thank you, Sham. Thank you for your comments and compliments. Really appreciate. Any other But wants to give a comment if they don't have a questions, and if they want to give any observations, 20-30 seconds they can give feedback. They're open to do it.
Rajesh Minocha ji, Naina, Kular sahab.
I think Rahul.
Yes, Antonella speaking, London Stock Exchange Group. I would like just to simply thank you very much. This has been an enlightening session. A lot of food for thought and a magnificent way of putting together different speakers, different experiences, and definitely a lot of opportunities for us to think through. Thank you so much. You have done a fantastic job. We're very grateful. Congratulations.
Thank you. So just to give you an introduction, Antalya is the CEO, if I'm not mistaken, with the London Stock Exchange Group. Am I correct, Robert?
No, I'm the head of Global Business Development Market Infrastructures for the London Stock Exchange Group.
London Stock Exchange Group.
Yes.
Thank you. Thank you, ma'am. Thank you. Pleasure to have you.
Thank you.
Any other questions or anybody else we can talk or wants to do it? Okay, so we call it a wrap, and thank you very much once again, everybody, all the attendees, the speakers. It was a wonderful sessions. And as I mentioned about our forum for the overseas investment awareness, and that we are going to launch with our colleagues, our associates who are here, from the Crystal, Stockel, and Guranti, Rakesh. It would be on 30th of January 2021. So that would be a platform we will launch, or the associations where we will do more kind of knowledge sharing, what we were talking about, that if you want to invest the money out of India, then what are the Indian rules? What are the regulations in the other country? And that will give us, so those two problems we have launched today. One is Ajmera Capital, which was like an hour venture, but the other one would be our forum, and that would be like a proper association to exchange the informations about the foreign investing into different stock markets, different regulatory markets in USA, in Europe. And I'm sure keep coming back to you, Roberts, for the speakers and advisor and your help to help us pass on your knowledge from London and Europe to the Indian market and Indian. And if that knowledge is passed on, I believe that we all will have a good business to do.
Well, sir, can I just say thank you very much for your initiative and innovation and the auspicious success of your launch today. And it's my great privilege to be sharing a panel with so many distinguished experts. And of course, I invite all of you to learn more about London Stock Exchange and Turquoise. And anyone that's an investment firm that would like to learn more, it would be our privilege to engage with you. So I thank you very much.
Thank you. Thank you, everybody. Thank you. Thank you, Grant, Stash, Himanshu, Rakesh, Vijay, and all the attendees, everybody. Thank you very much. Have a lovely weekend.
Thank you so much.
Thank you.
Rest of the week.
Thanks, everyone.
And look forward to interacting with you as soon as possible. Thank you. Thank you,
Thanks
guys.
again.
Bye-bye.
Congratulations.
Bye.
Thank you.
Thank you.
Congratulations.
Thank you very much.
Congratulations. Bye-bye.
Thank you.
Bye-bye.
Thanks again. Bye-bye.
Thanks. Bye, Grant. Probably you want to go back to sleep. Take a nap. I know it's quite early in Calgary. Thank you very much.
You're welcome. We'll chat soon. Bye for now.
Right. Bye-bye. See you on 5th or 6th.
Okay.
Yeah.